Hi guys, how are you today? This is Alan from Hirose Financial. Welcome to the Friday Forex Corner. Before I start the lesson for today, I just got a big news for you. So for today, it's actually the once a month American non-farm payroll. In America, it's a once a month event. That is gonna be your once a month chance to trade in forex market. Because we are expecting that after the release of the non-farm payroll, all the currency pairs is gonna be affected, and then we are expecting that the market is gonna have some big movements, and then when there's big movements, there is going to be a big profit comes with those movements. And this is a once a month chance for you to trade in the forex market, and just make sure to watch this video until the end, and then you will have a clear idea of how much potential, how much profit the non-farm payroll is going to bring you. Just make sure to watch this video until the end, and then you will have a rough idea on how you can aim for profit in the non-farm payroll. Just do a quick review on last week's lesson. In last week's lesson, I talked about forex trading. The profit calculation of forex trading is based on the price difference of open and close. For example, if I traded US dollar and Japanese yen, and if I expected the currency pair is gonna go up, the price is gonna rise, then I buy US dollar and Japanese yen. So when I buy US dollar and Japanese yen, the price of open is this much here. So after one day, the US dollar and Japanese yen actually goes up as I expected. Then it become this much here, and then I close the trade when the price becomes this much. So meaning that by looking at these two numbers here, the price difference is 1 yen. So if I traded 100,000 units in US dollar and Japanese yen, and when the price difference is 1 yen, then the profit I'm gonna get is gonna be 100,000 yen. So if I convert it into US dollar, then the profit that I'm gonna get is gonna be $960. So that's the explanation of last week. So the profit of forex trading comes from the price difference of open and close. For today, I'm just gonna bring this into more detail. So the price difference in forex trading is calculated by pips. So that's what we call pip. That's the unit of price difference in forex trading. So the more pips you have, the more profit you are gonna get. So first let's take a look what is pip and how do we calculate pips. So first I just need you to understand there are two types of currency pairs in the forex trading. So the first type is with Japanese yen, and the second type is without Japanese yen. So on the internet, there are a lot of explanation telling you that there are different ways of looking at these two types of currency pairs. So, but I have one way for you to look at the to find out the pips easier. So, just take a look at this example here. So, for Hirose's trading platform and people platform, for the currency pairs that is without Japanese yen, for example, Euro and US dollar, so it's gonna display until the 5 decimal places, which is this price here. So and for the currency pairs that is with Japanese yen, it's gonna be for example US dollar and Japanese yen, and those currency pairs is gonna be displayed until the 3 decimal places, which is price here. Alright, so in my understanding, for both of these two types of currency pairs with Japanese yen or without Japanese yen, the pip can be calculated from the second last digit. So take a look at these two examples here for Euro and US dollar. So for both of these two currency pairs, the pips is calculated from the second last digit. So for the euro and US dollar is calculated from the number 5. So the 5 here is 1 pip. And then for the ones that is without with Japanese yen, for example US dollar and Japanese yen here, so the first pip is calculated from the second last digit as well, which is the number 2 here. So well, now we know what is pip. So next we'll take a look at how do we calculate price difference by using pips. So first we'll take a look at the ones that is without Japanese yen. So for example, take euro and US dollar as an example. So in this example here, the price of open is this much here, and the price of close is this much here. So since we are calculating pips from the second last digits, so we have a simple calculation here. So 9 minus 5, so the difference here is 4. So we know that now the price difference of open and close is 4 pips here. So it's really simple calculation. So let's take a look at another example. So we are still looking at the euro and US dollar. So in this example here, the price of open is this much, and the price of close is this much here. So again we are calculating it from the second last digit of the number. So another calculation, so 55 minus 45, so the difference here is 10. So now we know that the price difference between open and close is 10 pips here. So it's pretty simple. So let's level up a little bit and let's increase the number a little bit. So in this example here, the price open for open is this much, and the price of close is this much here. So in here it's a little bit difficult here, but it's still okay. So so in here 725 minus 625 24.5. So if you need a calculator, then the price difference here is 100.5. So meaning that the price between open and close in here is 100.5 pips. So next this is how we calculate the pips without Japanese yen. So next we'll take a look at the currency pairs that is with Japanese yen. So we will take the US dollar and Japanese yen as an example. So as I mentioned, is the price for the ones that is with Japanese yen is displayed until the 3 decimal places. So for example, this much here. So for this type of currency pairs, it's still calculating from the second last digit. So we will take a look at a few examples here. So is the example of the price of US dollar and Japanese yen. So in this example here, the open price is this much here, and the close price is this much here. So since we are calculating it from the second last digit, then there is another simple calculation. So 8 minus 5, so the price the difference here is 3. So now we know that the price of open and close is 3 pips here. So okay, so another example is easy as well. So in this example here, the open price is this much and the close price is this much. So if we minus 35 by 25, then the difference here is 10. So the price difference between open and close here is 10 pips. So that's it's basically the same as the one that I explained just now, the ones that is with yen. So it's the same calculation. So next we'll increase the numbers a little bit. So in this example here, the price of open is this much here, and the price of close is this much here. So now we will minus 335.5 by 235. So now we have the result of 100 100.5. So now we know that the price difference of open and close for this example here is 100.5 pips. So that's how we calculate price difference by using pips. So if as long as we have more pips, then we can expect to have more returns by having more pips. Well, as I mentioned last week in last week's explanation, so well, if I traded 100,000 units in US dollar and Japanese yen, so as long as the price difference is 1 yen, so in this 1 yen here, the price the pip is 100 pips. So when the price difference is 100 pips, and if I trade 100,000 unit, which is $1,000 investment amount, then the profit I'm gonna get is gonna be 100,000 yen. And then if I convert it into dollar, then the profit that I'm gonna get is gonna be roughly around $960. So well, for pips, the value of pip is actually depending on the trade volume and the on the currency pairs that you are trading. So for this, I will actually explain it in the next video in next week. So in next video, I will be explaining on the value of pips and how you can calculate the value of pips by using trade volume and the currency pairs that you're using. So well, before I end the video, I do have a I talked about just now is today is the once a month event in America, is the non-farm payroll. So we are expecting that all the currency pairs is going to be affected after the release of the non-farm payroll at 1:30 GMT. So but when there is a all the currency is going to be affected, and then we are expecting there are some big movements in the markets. So when there is big movement, there is big pips movement. So well, when there is more pips, there is more profit. So well, it's a once a month chance for you to trade in the forex market. So if you are interested in the forex trading, just make sure to take a look at the market after the announcement of the non-farm payroll at 1:30 GMT. And well, just take a look at the market movement, and if the price is heading towards to a particular direction, go after the direction, and it's most likely that you are gonna take in some profits. So well, just take a look at this chart here. It's actually a chart that is actually the US dollar and Japanese yen price movement after the non-farm payroll last month. So after the non-farm payroll last month, US dollar Japanese yen actually went up by 52 pips within 1 hour. So if I skip all the detailed calculations, so if I traded 100,000 units, so which is $1,000 if I traded in US dollar and Japanese yen, and if the price moved by well, it actually moved by 52 pips. So the profit I'm gonna get is gonna be $500. So 1 hour, $500 profit, and that is what you can expect from forex trading. And I'm guessing that is only that huge return is only be able to get in forex trading. So well, just make sure to take a look at the market after the NFP, after the non-farm payroll release at 1:30 GMT, and just go after the overall direction of the market to aim for profits. So if you want to know more about how you can trade, what strategy you can trade the non-farm payroll, you can take a look at my previous video. And well, it's for the strategy I explained is for binary options trading, but you can use the same strategy in forex trading as well. And because the time frame you're trading might be around 1 hour, so take a look at the video I posted in the description and find out more on how can trade the non-farm payroll with a technical indicator strategy. So well, that's pretty much for today. And well, if you do have any question on pips, just feel free to leave me a comment down there, and then I can get back to you with a more detailed explanation. And well, if you are interested in forex trading and want to find out more in forex trading, then follow my next video on next Friday, and then we will talk about more on the pip value depending on the currency pairs and trade volume. And yep, that's it for today. If you like my video, give me a like and subscribe to my channel for more live trading video, and I will see you soon again next week. Bye.